Hello and welcome, ladies and gentlemen. Today I have something sensational for you. You are here with the Slow Trader, and today we are going to look together at a beautiful indicator that I found recently, and I implemented it to my trading strategy, and it will be a pleasure for me to show you that beautiful tool. Let's get into it. Okay, I'm here on the euro pound chart, and I'm here on the 1 hour chart. By the way, this is the tradingview.com website. It's actually free, everybody can use it. You probably already know it, or for all those other noobs that want to get into FX trading, this is a beautiful website that I also can recommend to you. So yeah, let's not waste any time and let's see that tool that I want to show you. Now, what I want now is after you open the TeamViewer website and open the chart, you go up here where the indicator is and click on it. After you clicked it, you will see a window here, a small one. Then click on search, and then I want you to type in the pivot reversal, and then you already see here a suggestion, the pivot reversal strategy, and then you click on it. After you clicked on it, let's close that, we don't need that. You will see here on the chart, you will see some blue and red signals. Let's call them signals. And I'm going to explain you now what those signals are. Now, the difficulties that many traders have nowadays, or actually since ever, is to find out what is the best entry point. I know there are many strategies out there, like the price action strategy or method, or other tools, or like let's say the slow stochastic or the RSI indicators, or what's also very widely distributed is, for instance, the moving averages that you also can use, which is pretty good. And but right now here on this video, I just want to stick to that one indicator that's really powerful in my opinion, and I'm gonna show you why. Let's say you are a beginner or a pro trader who wants to try out a new strategy. Here is one that I can suggest to you. Let's go on the 1 hour and zoom in a little bit. We are here, for instance, on the 12th March. You see here an buying signal. Now, just to be clear, the blue ones are signaling you that you have to buy, and the red ones are here telling you that you need to sell. Now, you might think, okay, this is everything fine and good, but you can see that there are a lot of also really bad signals. Like, for instance, you can see those red ones. I mean, clearly we are here in an uptrend. For all those people who know what a price action is, it's actually nothing else than, you're looking if there is a movement up, which is like nothing else than, a trend that you can identify just by looking on the chart. You already know that it's a uptrend. I mean, you can also like use something like that and say, hey, this is an upwards trend, and obviously the trend is ongoing unless it's like breaking the line, for instance. But let's put that beside. Let's just focus on that pivot signal. You can see here the blue ones are telling you that you need to buy. And let's say, for instance, if you had opened a position, let's say here or here on 10 March at 1 o'clock, you'd open here position, and you would say something like, I want to have a risk to reward ratio that is something like that. Let's say I want to go maximum here to take a losing trade. So I put my stop here. That's like 121 pips. Oh, it's quite high. Then you say, okay, I want to at least have 1-to-1 or 1-to-5 risk to reward ratio. Let's put it here. You can already see here, if you had opened the position here and waited from the 10th March 2 o'clock till, was it 3 o'clock? Oh, wait. Sorry, I think I said it wrong before. Sorry for that. Let's say you saw the signal here at 1 o'clock, and then between 1 and 2 o'clock you opened the position, and then you waited from the 10th March. You can see it down here, the date. You waited until you reached your profit target, which is here. I mean, you have like 1-to-5 risk to reward ratio, which is really good. Actually, every trade should be at least 1-to-1 risk to reward ratios. Otherwise, you would diminish your account, and it's not the goal of any traders. Actually, the goal of any trader should be that you are protecting your asset. So risk management is very important. I know it's a little bit boring, but still, it's if you want to stay in that game, you need to protect your capital. Anyways, now we started from the 10th March until the 12th March, the same, more or less the same time. So what we have here is a nice, beautiful profit of, let's say, about 177 pips, which is really good, considering that it takes 2 days. And yeah, that's one example where you can actually use that pivot reversal tool or signal tool, or also strategy, call it whatever you want. And in the end, it's also important that you don't use only those pivot reversal tools. It's also important that you use it with something else, like the moving average. Let's just put it for the sake of for this presentation. Let's go, I don't know, I like the EMA. I'm going to use the moving average exponential. I'm going to just adjust it. I'm going to tell I need 50 moving average, and let's put it red. I want to see it really good. Let's put it a little bit thicker so that you guys can see it. Now you see, you can combine also those two indicators, the pivot reversal together with the EMA 50 period EMA, which is, I mean, those two are already pretty good combination. If you are, for instance, a trader who prefers having as less indicator as possible, then you can combine those two together with your price action technique, or just analysis of the trend continuation analysis. And yeah, you can pretty much find good entry points. Obviously, you would say, I don't want to have those, I don't want to see or give any attention to those red pivot points or pivot points that signaling me that I need to sell, unless you're like a trader who likes to trade, or let's say you are a scalper, for instance. I mean, if we zoom in a little bit, we can see here, for instance, if we that's on the 10th March, you can see here a signal. If we go a little bit lower on the time frame, the 10th March, when was it? Sorry for that, it's a little bit messy here. You can see if you go even on a lower time frame, you can see there appear even more of those signals, which is kind of a little bit nosy, to be quite honest with you. Let's do it simple. Just can't find it. The 10th March, was it? I remember the time. The 10th March, must be somewhere here. Yeah, You can see you can, let's say for instance, I think was it here? Yeah, it was here. No, sorry. Anyways, let's just continue. Let's say you received or noticed the signal here that you need to sell. Then you open a position here. Let's say you wait because you're a patient trader. You can see that you can even make here 37 pips, which is quite a lot. I will make another video about how to calculate the pips so that you know, yeah, if you can trade a certain pairs with those. If you have, for instance, a fixed target of 10, 20, 50 pips with one trade that you are targeting, you can actually do that. But that's another subject for another video. For now, we're just looking on that pivot here. Let's continue down here, the 27th February. You see here a sell on the buy signal. Let's say you are a trader who's holding a position for a couple of hours, and you see here it's above the trend. There is a trend continuation that is above the 50 period EMA. So you know that you have to ignore the selling signal here, and you're just focused on those blue ones that are signaling you that you need to buy. For instance, if you had to open here a position on 27th February, and if you have waited for a couple of hours, let's say 5.5 hours, you would have like 57 pips, which is quite good. It's actually sensational, 57 pips. Let's say you would have one lot that should make you like $570 or euro or whatever currency that you have, or as a base currency with your broker. And yeah, that was just a brief introduction for you, so that you see what is the pivot reversal, and also just to to shout out to the community that there is a cool, really fascinating, and powerful tool that you can use in your day trading strategy. I mean, it's just a lovely tool that you can use for your advantage. I mean, look at this; it's just beautiful. You can see here we have here a typical down trend. It's just sensational how it. I mean, it's like a perfect example. You can see here that you need to ignore those buying signals and just focus on those selling signals. And if you like, let's say, just take an example here. Let's say that's the 12th February, you decided to open a position here, a short position, and you would have like waited, I don't know, like 1.5 hours, depending on your strategy, your personality type of a trader, what you are, and what's your time horizon. It could be like you are a very scary trader. Like for instance, I don't like to put my money for a very long time on the market. I like to get in and out. Still, again, I'm not really somebody who likes to scalp. So I try to find out the best, the best way to trade, which suits to my personality, and I think you should do that too. But before you use that, it's really important that you backtest that. If you don't know how to backtest, go just type in on YouTube how to backtest a strategy. You will see there are a lot of other videos out there that explains you how to backtest. If you want, I can also make a backtest video how I do backtesting on my strategies. And yeah, I will put some more trading ideas, trading strategies, like other indicators that you can combine, which indicators are suited for other forex pairs and financial instruments. And yeah, I don't want to make that video any longer. Thank you for watching. I hope you enjoyed it. If you have any feedbacks, what should I improve, or what next video I should do or cover on the next video, just type down there in the comment section. And yeah, thanks again for watching. Have a nice day and yeah, continue to be profitable. Bye bye.